Hi there, and welcome to this edition of Startup Central. I'm Nayantara. This is the only show you've got on Indian television like this, which is dedicated to startups, innovation, technology, disruption. Basically, if it's going to fall under the aegis of the new economy, it's going to be here every weekday at sharp 6 p.m. Now, ladies and gentlemen, just like all the stakeholders from the community that we get on this show, the team that puts the show together, the Startup Central team, thrives on constructive criticism. Yes, we love praises, but we also love constructive feedback. Feel free to criticize us. How else are we going to improve? Write into us, tell us what's missing in the show, how we should be doing things differently. If you want to see something else on the show, our email address right on top, suc@etnow.tv. Well, today is a really big day for the startup ecosystem, isn't it? You had seen this week the Zomato IPO open. It's now closed. It's been subscribed 38.25 times. On the last day of Zomato's IPO subscription, we've seen another startup, or should I say a decacorn, again from the National Capital Region, head for Dalal Street. I'm talking about Paytm, which has filed the draft red herring prospectus with the market regulator for a 16,600 crore rupee IPO. So Paytm has ambitions of having India's largest IPO. The current record is held, of course, by Coal India going back to 2010. That IPO was north of 15,000 crore rupees. So coming to Paytm now, 16,600 crore rupees of the IPO. 50% of that is going to be via fresh issue. The other is going to be via the offer for sale. What Paytm is also saying is it's keeping the option alive for a 2,000 crore rupee pre-IPO round. So those are some of the numbers that you need to know about. I'll take you through the others. And very interestingly, like Zomato, what Paytm is doing is it's improved its unit economics. It has really narrowed the losses as well. It was north of 4,000 crore rupees in FY19. By the end of FY21, that means 31st March 2021, the net losses have been narrowed to 1,700 crore rupees. But what's also very interesting, what I personally found very interesting, was the sharp cut in marketing expense. We're going to be talking about that and a lot more on today's edition of Startup Central. But the big question is, and something that we've been talking about, you cannot evaluate companies like Zomato or a Paytm the traditional way of just looking at the P&L or looking at the EBITDA. You've got to change your lens. You've got to talk about, is it a category leader? Is it got better unit economics? Is it going to be able to grow more? What about the target addressable market? But you don't want to hear all that from me. We thought we'll reach out to an expert for all of that. Joining us live today is Gautam Chhugani from Bernstein, one of the best fintech analysts you got over there. Gautam, a pleasure talking to you. Thanks so much for joining us here. So it's now official. Paytm has filed the draft red herring prospectus. Yes, many people thought it would be for a much larger amount, but it is now for 16,600 crore rupees. My first question to you is, it's an expected move. Some lessons I'm sure a lot of people have learned from Zomato, but what's your advice? When someone evaluates a fintech IPO, what do they need to look for?
I mean, when you look at a fintech IPO, obviously, there is a base assumption around what's the core business. In the case of Paytm, it's payments, which is how they acquire most of the customers. But the future growth clearly depends on financial services. So the customers and the merchants that Paytm acquires, what is it going to do over the next 3 to 5 years with it sort of providing it financial services, be it in the form of lending, wealth management, insurance, and so on and so forth. So a lot of analysis on this IPO is going to depend on what investors believe would be the revenue and monetization opportunities coming from financial services, which is all in the future.
The problem also is, Gautam, that, a lot of these founders dream big, bigger, biggest, right? So each one is convinced that they're the category leader. It's all from the private space. Numbers are not easily available. They all talk about hyper growth. So from an investor perspective, especially a retail investor's perspective, it's very easy to believe the growth story, but what should they really look for to say, okay, yeah, this hyper growth phase is going to pay off?
Yeah, I think it all depends on what segments you're looking at. So if you look at Paytm, it operates in multiple segments. It operates in mobile payments. It operates in, on the merchant side, it operates in a business called merchant acquiring. It operates on the in the online commerce side as a payment gateway. And then when you look at financial services, there are three verticals like lending, wealth management, insurance. So the answer is different for different verticals when you talk about category leadership. I think Paytm clearly is at a point where it's established category leadership in the overall sort of payment super app, more in the form of revenue monetization versus its peers. And I think overall the landscape has changed, where it has seen competition from Google Pay and UPI, where it obviously is constantly fighting to kind of keep UPI market share. But also at the same time, the payments landscape in India is quite challenging, because a large part of the payments volume doesn't generate revenue. For example, UPI doesn't generate revenue. So if you look at just UPI market share, or if you just look at just one part of the puzzle, then it doesn't necessarily correlate to revenue. So you need to kind of look at what are the revenue generating verticals within Paytm's broad portfolio of payment services to kind of arrive at what the future growth would entail.
Okay, so let me now break that up a little bit. You've talked about the various buckets, so let's address them one by one. So if you look at mobile payments, and if you were to go through the Paytm DRHP, I don't know if you have, whenever you do, it talks about, for example, mobile payments reaching $3.1 trillion by FY26. It's quoting Reds here on that. But if I were to look at mobile payments, Paytm right now is not the leader when it comes to the UPI payments. On wallet, of course, it has had the lead. You've got wallet interoperability, which has now been allowed by RBI. So what would you give more focus to? Would it be mobile payments, or would you look at the merchants? Where merchants as well, you've seen an explosion of fintech companies as well that's coming in. Or do you look at the new businesses, whether it's to do with e-ticketing or fast tag? Because what the point I'm trying to get at is, do you need to be a leader in each of these categories, which right now, it may not be?
I think given the competitive landscape in India, just focusing on UPI was not optimal strategy for Paytm. One, because it doesn't generate revenue, and second, you need to keep spending. So we published this recently that Paytm probably spends about 0.2% of their revenues on 0.2x of their revenues on marketing. When you compare it to its peers, the peers are spending upwards of 2.5, 3x of their total revenue. So clearly, just focusing on one vertical for category leadership is going to be extremely challenging given the competitive dynamics in India. So what the approach Paytm has actually taken is a more holistic, full payment stack. So they don't just look at UPI market share, but they focus on more the merchant market share within UPI, and then further. Paytm obviously has a wallet business, which is kind of its legacy business, which is kind of, it kind of has held on to its volume while not growing at the same pace as UPI. But more than that, on the merchant side, you have the merchant point of sale business, which it has started to build on, which are all sort of revenue monetizable opportunities. And then on the online side, which is how it used to do its wallet business, it's also doing what is called a payment gateway business, which is, again, because it starts to offer or accept third-party instruments like debit and credit cards, the MDRs or the merchant discount rates, they are still reasonable to kind of earn revenue. So when you look at payments, Paytm has taken the approach of a holistic payment stack. It has a digital payments bank, which it integrates with its offering to kind of present a holistic kind of a view both to the consumer and the merchant. So when you kind of compare that, then it starts to become very material from a broad merchant payments landscape. And so just looking at UPI as a fairly narrow way of doing it, you need to kind of look at the broader picture. And then again, you need to keep in mind the context of the Indian landscape, right? The Indian landscape is a very competitive payments landscape. So you need to select your spots where you can generate revenues.
Okay, because the point is that given this IPO deluge, I'm guessing that you're going to see many other fintech companies also head in. You already got MobiKwik, which has filed the DRHP, and I accept that MobiKwik is nowhere the same size as Paytm. But just a quick word on the fact that what another theme that's paying out when you look at the DRHP, and I don't know if you've read it as yet, there seems to be this idea of democratizing finance, personal finance, and the mission of having 500 million Indians entering the mainstream economy. These are really big numbers that we're talking about. Is it possible? And is it possible for Paytm to do it?
Look, I think I don't know about 500 million Indians, but clearly in India, we have about 60 million credit cards. That roughly translates to about 30 million unique users of credit cards, which is, compared to the population of this country, is nothing. When you look at the kind of credit records that the credit bureau has, while not at the same density, it probably has about 400 million credit records. So clearly there's a market out there beyond 60 million credit cards or 30 million credit card users who need credit. And now it may not be that they may consume credit only in the form of a credit card, which banks may or may not offer them, or banks may offer them, but not grow at the same pace at which the total addressable market of credit could play out in this country. So what Paytm or any of these platform businesses look to do is they try to get to a point where they can address a population which operates at a much lower income or a lower ticket size, and using technology to kind of get to a point where the customer acquisition cost is feasible, because obviously banks' customer acquisition costs are sort of fairly high, and hence has to deal with a certain customer of a certain affluence, and hence the logic or the rationale that these platform fintech businesses are able to kind of address something like 50 to 100 million users at one go, and provide them seamless credit on the app while they are using it in their day-to-day life, right? And that's the notion that all of these are going after. It's not so much about the way banks operate, where they're trying to get the best, cherry pick the best customer. It's about providing financial services and credit to the mass market, and especially where banks are not able to kind of reach that fast.
Can I put you in a spot and ask you, give me a bull case for Paytm and give me the bear case for Paytm?
I mean, the bull case, like I started out by saying, right, the bull case for Paytm is able to use this platform. So my view of the world is that payments is a hygiene. It's a commodity service. You need to keep fighting in the payments business and stay relevant, which I hope Paytm with its branding is able to do. So that's first part. The second part is, are you able to use this platform to actually monetize and actually provide, just like what we described, is mass market financial services, broking, wealth management. You saw the Paytm money sourcing retail customers for Zomato IPO. That's all part of monetization, right? They are essentially providing their broking services to retail users in tier 3, tier 4 India to provide access to these tech IPOs happening in India. So essentially, the bull case is that Paytm's different platforms, insurance, Paytm Money, Paytm Lending, is able to kind of provide this service at scale in the next 3 to 4 years, and with reasonable credit quality on the lending side, is able to build the partnership, is able to build a very robust and vibrant marketplace in partnership with its partner banks. At some point, hopefully, it upgrades its payments bank license into a full-scale digital bank, either in the form of small finance bank or a full-service bank, and that's the bull case. The bear case is, market gets even more competitive on payments. It gets harder to survive. Financial services, while has a huge monetization opportunity, gets a lot more competition and everyone trying to provide lending to the same set of players or the same set of users. And yes, I mean, both could play out. But clearly, I think what matters is your brand, your platform, your distribution, and then being able to get the marketplace together. So when you compare Paytm with its peers on these financial marketplace related metrics in terms of how much progress Paytm has made in the last 24 months, that's where they're a bit ahead. So I think the bull bear case is quite clear. One involves a lot of good execution on financial services, and the other probably gets harder.
My final question to you, Gautam, who are you comparing Paytm with when you say industry peer? Because who are the others who are offering this entire full stack?
So right now, Paytm is the only player which is offering full stack. On the outside, it looks like it's doing a lot of things, but all it's doing is taking the same stack and expanding it into adjacent offerings. So when you compare it to the peers, we're talking about Google Pay, we're talking about UPI, we're talking about PhonePe. And now, obviously, those are UPI-led players because their success and growth came from UPI. So They've done really well on UPI. Now, the next step for them is to build this marketplace that Paytm has kind of taken its first steps into in the last 24 months.
Okay. With that, I'd like to thank you, Gautam, for taking the time out for joining us live on this edition of ET Now. We're hoping you'll be back with us when we know more about the valuations of Paytm, what the price band and all of that is going to be. It's always a pleasure talking to you.